Hello and welcome to this video on the basics of accounting. In this video, we will be covering the fundamentals of accounting, including key terms, principles, and concepts. By the end of this video, you will have a solid understanding of the basic concepts of accounting and be ready to apply them to real-world situations. In this video, we will be discussing 5 topics: what is accounting, key terms in accounting, the accounting equation, accounting principles, and financial statements. To start, let's define what accounting is. Accounting is the process of recording, classifying, and summarizing financial transactions to provide information that is useful in making business decisions. Accounting provides insight into the financial health of a business and is essential for managing finances. In simple words, accounting is a process of keeping track of all the money coming in and going out of a business or an individual's finances. It helps to keep track of the money, so we can know how much we have, how much we owe, and how much we are spending. Next is the accounting equation. The accounting equation is a fundamental concept in accounting. It is expressed as follows: assets equals liabilities plus equity. This equation ensures that the balance sheet, which is a financial statement that shows a company's financial position at a given point in time, is always in balance. Next is accounting principles. There are several accounting principles that are important to understand. The first is the accrual basis of accounting, which recognizes revenues and expenses when they are earned or incurred, regardless of when cash is received or paid. The second is the matching principle, which requires that expenses be matched with the revenues they help generate. The third is the consistency principle, which requires that accounting methods be consistent from one period to the next. Next is the financial statements. There are 3 main financial statements that businesses use to report financial information: the income statement, the balance sheet, and the statement of cash flows. The income statement shows a company's revenues and expenses over a period of time and calculates the net income or loss. The balance sheet shows a company's financial position at a given point in time, as we discussed earlier. The statement of cash flows shows how a company's cash balance changed over a period of time. And that's a wrap. We hope this video has given you a good foundation in the basics of accounting. Remember, accounting is an essential tool for managing finances and making informed business decisions. If you have any questions or comments, feel free to leave them in the comments section below. Thanks for watching.